What's up, everybody? Monday, May 24th. New edition of MMT Trader has been sent out. If you want to get a copy of that, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. So a couple of things. Maybe you've heard about this or you've read about it. Almost half of the states now in the United States are canceling the supplemental unemployment insurance benefits. That's the additional, that's that $300 a week benefit. So 23 states have now said they were going to opt out of that program. That is a federally funded unemployment benefit. They say, hey, we don't want it anymore. We want to get our people back to work. So this is going to be very interesting. Now it's kind of like the earliest that some of these states are ending it will be June 12th. I think that's like Alaska, Florida, maybe a couple of others, and then some later in June, some in July. The whole program was slated to end, I think it was September 16th, but these states are pulling out early. So we will see, okay? There's a number of uncertainties here, or a number of questions, if you will, that are going to be answered. Because a lot of people, maybe you're one of them, have argued that the $300, people are just sitting at home, they don't feel like going to work. So, and I've said, hey, if $300 a week is keeping you from going to work, then that says a lot about the wages you are receiving. And they're not very high, obviously. So we'll see what's going to happen, but, there's an old saying, be careful what you wish for. And like we know that until now, since the pandemic, and with the boost in unemployment benefits and the checks, etc., that were sent out, the economy has avoided a deep recession. We've seen financial markets bounce back, the stock market at all-time record highs or near all-time record highs. The economy is reopening. Consumers are flush with cash. The problem we really had was the shutdown in productions, the supply shock. That's starting to loosen up now. But you start to cut these income flows. All right, this is everything that I talk about. Net transfers from the government to the non-government. It's almost like every single video I'm talking about, $6 trillion in personal savings that didn't exist before. And it's not because we didn't go to movie theaters and restaurants. It was a net transfer. That's government spending, deficit spending adds to the financial balances of the non-government. Not equally, of course, but that was a big historic net transfer. So you start taking that money away, and look, ordinarily I may argue that, hey, it's a wash. I mean, if people go back to work, then producers, business owners, their income goes up. So then it's a transfer from, let's say, the workers to the business owners. The problem is, if people are staying home because of $300 a week benefit, again, they're not getting paid a lot of money. So it's not a wash. It's basically a net loss in income. So we're going to see what's going to happen. I frankly have some concerns about this. I will be monitoring the numbers, that is the fiscal flows. As long as the flows remain positive, then I'm going to say, the economy is going to be fine and we'll continue on our merry way and things are going to open up and the stock market's going to continue to go up. But if these cutbacks in fiscal support, if these cutbacks in unemployment benefits start to show up as a real deceleration in these flows, then I can tell you right now, the economy will be in trouble, and so will the stock market. And the stock market, crash, collapse that everybody has been, hoping for. Not me, but I mean, it just seems like everyone wants the market to crash. Everyone. That's going to happen. But again, too soon. Just letting you know that 23 states are about to opt out early from these weekly unemployment benefits. That's number one. Number two, I'm going to ask a question. What the heck is Janet Yellen doing? What is she doing? Look, we are coming up to the debt ceiling. The debt ceiling has to be raised by July 31st. If it is not, then the government can no longer issue bonds. So you would think, or I would think at least, that Treasury, which Yellen is in charge of, would want to keep its financial balance, its balance at the Fed, at the highest level possible, because she knows that the debt ceiling is coming up in 2 months. And, you know, we have a very politically divisive situation. I mean, right now, frankly, it doesn't look like Biden or the Democrats in the Senate are going to get any help whatsoever from the Senate Republicans. So we may not see an increase in the debt ceiling. And if that's the case, if that's the potentiality, like, why is she drawing down the balance? Because look, late last year, before she even took control of the Treasury, there was something like 1.8 trillion in that account. I mean, I was talking about it, how, like, why do you need so much? Mnuchin had it up to 1.8 trillion. I mean, when you think about it, historically, there's never really been more than 300 billion at any one time in that account. But when the pandemic happened, like, he ran that thing up almost to 2 trillion, and it stayed there. And then Yellen comes in, right, in January or early February, and she's like, we're going to take that thing all the way down to 500 billion. Now, two problems on that. One, everyone knows by now that that spending, that disgorgement of funds, it just is causing this massive buildup in reserves in the banking system, and that's problematic for the banks. I mean, we've been hearing about that, although yesterday I did a video, I'm saying loans are picking up, all that stuff, but still, it's, you know, that is hampering the banks. There's no question about it. So she's doing that along with the Fed, by the way, I have to say, which is buying 120 billion a month still of securities, which is completely unnecessary at this point, because they're just like adding fuel to the fire in terms of this huge reserve dump. And now, with the debt ceiling 2 months away, she's just spending down that balance. Like, wouldn't you want to keep a high balance in there? Look, think about it yourself. You got your checking account, you got your bank account, right? And you know that in 2 months, your income is going to be cut off, or your means of, let's say, your means of raising money or getting money is going to be cut off. But you're still going to have your bills to pay. Would you spend out all your money right now and leave your account at, like, you know, a pittance? Or would you hang on to as high a balance as you can possibly have so that you know you're going to be able to meet your liabilities? I mean, that's what I would do. It just seems normal. But no, she's doing the opposite. She's spending it down, like now we're down to 800 billion. So she spent out 1 trillion. Okay? So Treasury's cutting back on bond sales now, when you would think, hey, let's do as much as we can now because we're still under the suspended debt ceiling. Let's pump it out now because the debt ceiling's coming up and it maybe not going to be raised. So, like, I don't know what's going through her head. I'd like to ask her, what is going through your head? I mean, this is just like, it just seems like logical to me. I don't know what they're doing. But this is a question it's a rhetorical question. Like, I don't know what they're doing. I don't know who these people are. I don't know where they get these. Well, I know where they get them. It's like a big club, a little club. And if you're in the club, then, you know, you get circulated all around in these government positions, these high positions, policy, this and that, advisory positions, lobbying, whatever. That's what it boils down to. Because, folks, it doesn't make any sense. So anyway, here's what it boils down to. For all of you out there hoping for, doomsday coming. And I know there's a lot of you. Not me, but I know there's a lot of you. I frankly like making money. I did a whole video about how I spent years and years on a trading floor going short all the time. That's not a way to build wealth. That's stupid. But if that's your thing, hey, you might get a chance. Because we got the cutbacks in the unemployment insurance, which a lot of you are cheering for that. Like, get those bums back to work. Well, be careful what you wish for. And number 2, we got the debt ceiling. So, your celebration day may be coming pretty soon. But anyway, my subscribers will be on top of it. All right, everybody. See you tomorrow. Bye.